Hi, good morning and a warm welcome. Rose Jacobs for 𝐊𝐿𝐴𝐚 TV, reporting to you live from Sydney, and you're watching the Global Markets Roundup show. Let's dive into some key highlights and happenings from yesterday, starting with the US market. US shares were mixed and global equities retreated from record highs on Tuesday as mounting worries over the slowing pace of economic recovery and the impact of the coronavirus Delta variant overtook investors' hopes that the Federal Reserve will delay tapering. Key US equity benchmarks were down and the MSCI World Equity Index retreated from a record hit overnight, following 7 consecutive days of gains to an all-time high. S&P 500 and Dow Jones slipped on Tuesday, September 7th, dragged down by fears of a slowdown in economic recovery, while the Nasdaq was marginally up after firms like Apple and Facebook saw gains. The S&P 500 was down 0.34%, while the Dow Jones fell 0.76%. The Nasdaq Composite rose 0.07%. Investors stayed away from risky bets after data from the Labor Department on Friday indicated a slowdown in US economic recovery amid rising cases of the COVID virus. Many offices and businesses remained shut. The travel industry is worst affected due to the cancellation or postponement of trips. Consumer discretionary and technology stocks were the biggest gainers on S&P 500, while real estate and industrial stocks were laggards. 9 of the 11 index segments stayed in the red. And moving on to the futures and commodities market, and gold futures were down 2.08% to US $1,795.65 per ounce. Silver decreased by 1.75%, while copper fell 1.41%. Brent oil futures decreased by 0.86% to US $71.60 per barrel. Looking at the bond market, the 30-year Treasury bond yields was up 2.59%, while the 10-year bond yields rose 4%. US dollar futures index increased to US 92.543. And now it's time for a small break, but stay tuned and I'll be back with the Asian and Australian market updates.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
sectoral coverage or industry news.
We cover it all on our news segments.
Be on top of the latest news
with 𝐊𝐿𝐴𝐚 TV.
Welcome back, I'm Rose Jacobs and you're watching the Global Markets Roundup show. European stocks ended lower on Tuesday as caution kicked in ahead of a European Central Bank meeting later this week, while focus turned to a flurry of telecom deals led by Deutsche Telekom. The Pan-European Stocks 600 index slipped 0.5% after coming close to a record high in the previous session. London's FTSE 100 traded modestly in the negative zone, down by 0.18% at 7,174 in the afternoon trades, while the mid-cap focused FTSE 250 index was down 0.29%. Moving on, the UK government today announced a tax hike of 1.25% on shareholders' profits, along with a rise of 1.25% in the national insurance contributions. The new tax hike is expected to contribute £36 billion towards the Social and National Health Service over the next 3 years and will be effective from April 2022. Japan's Topix index rose on Monday to its highest level in more than 3 decades, while the Nikkei also jumped as investors continued to buy undervalued stocks in hopes of a swift economic recovery and positive corporate outlook. The Nikkei share average gained 1.83%, while the broader Topix jumped to $2,041.22, its highest close since August 1990. China shares ended higher on Tuesday after data showed exports unexpectedly grew at a faster pace last month as, as officials pledged to push further opening of capital markets to foreign investors. The blue chip CSI 300 index closed 1.2% higher, with its financial sector sub-index climbing 2.01%. The real estate index was up 0.37% and the healthcare sub-index down 0.16%. Meanwhile, South Korean shares fell on Tuesday, dragged down by tech heavyweights, with investors refraining from making big bets amid uncertainties around the tapering of the US Federal Reserve's bond purchase program. The benchmark KOSPI ended down 0.50% at 3,187.42. And the ASX 200 yesterday closed at 7,530, up by 0.02%. On Tuesday, the Reserve Bank of Australia, or RBA, announced its plans to start reducing the bond buying stimulus to Australian $4 billion per week, despite coronavirus lockdowns hurting the economy. A few ASX listed shares going ex-dividend on Wednesday include Blackmores, Brambles, Medibank Private and SEEK. On Tuesday, crude oil prices fell amid concerns about weak demand in the US and Asia, while WTI fell 1.4% from Friday's close to US $68.35 per barrel. Brent crude futures closed 0.7% lower at US $71.69 a barrel. Energy stocks such as Woodside Petroleum and Santos could trade lower on Wednesday. Gold prices fell after a buoyant dollar and higher yield took the shine off the metal. Spot bullion prices were down 1.6%, while US gold futures finished 1.9% lower at US $1,798.5 an ounce. ASX listed gold stocks such as St Barbara and Newcrest Mining could trade lower on Wednesday. The most traded iron ore for January 2022 delivery on China's Dalian Commodity Exchange ended 1.1% higher at 763 yuan, or US $118.18 per tonne. Benchmark 3-month aluminium on the London Metal Exchange fell 0.5% to US $2,760 a tonne by 1,652 GMT. Copper slipped 1.1% to US $9,344 a tonne. And that's it for now. Keep watching 𝐊𝐴𝐼𝐴 TV for more market updates. I'm Rose Jacobs, and as we say here at 𝐊𝐴𝐼𝐴, stay apprised and invest wise with 𝐊𝐴𝐼𝐴 TV.